From what I've read, the reallocation of capital into alternative strategies is shifting. It's more, it's growing in interest. It's moving towards like a 50, 30, 20 mix of stocks, bonds, and alternatives. I don't know if you share that sort of thinking as well. But the interest in alternatives, it's more open in that more people can participate in this space. Does it also mean that there are more risks, or are there less risks? I mean, how should you approach this if you are venturing into this alternative investment space?
Yeah, it's a great question. First of all, if I start with your observation, I think it is absolutely fair to say that the allocation to alternatives is growing. Whether you're talking about institutional investors, these can be everything from GIC here in Singapore to your insurance company, the SMU and endowment, anything like that, all the way to individuals, and we're talking high net worth to the person on the street. And at the same time, there are different protections that we're used to as investors when we talk about listed stocks, when we talk about mutual funds, kind of the traditional way of thinking about stocks, bonds, what we grew up thinking were investments. There are regulations that protect investors as much as anything can for those sorts of instruments. Alternatives are not regulated the same way, and in many cases they're just not regulated. And so with that very light amount of oversight on a relative basis, investors need to be very, very careful. And we can look at all sorts of different examples, and we mentioned a number of them in the book. You've got, if you go back 20 years, or 15 years, you've got Bernie Madoff, and he was running a big successful hedge fund. And then you've got FTX and everything that's gone on in crypto in the last 5 years in particular, so many frauds and things like that. So yeah, you need to be careful. I agree with Swee Yong that this is where I think people have an opportunity to make their money work harder for them. But you can't fool yourself. There's a lot of risk out there.
Is it a cowboy town out there in terms of alternative investments?
I think cowboy is probably a little bit strong in some markets. But if you look at crypto, whatever's like, it's, cowboys riding a T-Rex with a handful of bare knives. I mean, it's like, how much spice do you want? It's kind of like crazy risky, as we've seen. And so, depending on which piece you're talking about, there can be more or less risk.
Yes, but that's crypto is considered a very new thing in the market. I've got friends and relatives 20 years ago who have gone into prawn and fish farming businesses. You go evaluate them, you visit the farm, and you have to keep going back there in case the farmer that is your joint venture partner is sleeping on his job, right? So those who are active in this farming business, they have actually done well, and they continue to be in farming investments throughout these last 20 years. Those who were lazy with just believing in the promises that I buy this ostrich in Australia, and then the eggs from the ostrich would keep me filled with recurring income. Those guys, of course, lost their money.